Greetings traders, and welcome back to another survival guide. Chris here, bringing you some more information in the world of trading. Today we're going to be discussing what the differences are between retail trading and proprietary trading, otherwise known as prop trading. As traders begin their trading career, one of the first decisions that they need to make is, are they interested in being a retail trader and trading with their own money, or being a proprietary trader where they're a trader trading with someone else's money? Obviously, the concept of trading with someone else's money does seem to be better, and it's widely accepted to be the smarter choice. However, I'm not here to make decisions for you. Instead, I wanted to cover the advantages and disadvantages of both. That way, you can be more informed and make your own decision on which one is right for you. So, let's get going. The first step to be able to make an informed decision about whether retail or proprietary trading is right for me is to be informed, first off, about what retail and proprietary trading is. So that's where we'll start. We'll start off first by discussing what prop trading is. Prop is just a short lingo that is used to describe proprietary trading. And proprietary trading is when an institution is trading with its own money versus taking deposits from other individuals or collecting funds from other individuals to trade. They in turn are trading with their own money. The reason why this is interesting to us as traders is because if we become a funded trader at a proprietary firm, that money that is the institution's own money will then become our money as well to trade with. So while we as the trader get to trade with someone else's money, it's the institution who's using their own money to allow those trades to take place. That's what proprietary trading is at its core. And it's a very viable career path for many individuals because it opens the doors for those with skills but not finances to support their trading lifestyle. If you want to become a prop trader, you should know there are different types of mechanisms in play that occur differently depending on which firm you're going to based on your specific needs. The best opportunities usually will allow you to start without a heavy initial deposit from your side. In most cases, you might only have to cover the cost of the training program in some of these scenarios. And this is great because it allows you to begin with limited capital. It gives you a platform to learn, practice, and eventually become a professional trader while keeping your costs and your overall risk relatively at bay. Now, some proprietary trading firms do not allow this, and some might require a deposit match where as much money you come to the table with, the proprietary trading firm will match as well, and it'll be a 50-50 split from there on out, but it depends on where you go. So definitely make sure you take a look and ask the right questions if you are searching for a proprietary trading firm. The advantages that a proprietary trader experiences over a retail trader are pretty easy to think about, with the first and main advantage being the lower risk category. This is referencing to the amount of money, the amount of exposure financially at risk that a trader in a proprietary trading lifestyle will have over a trader in a retail trading lifestyle. And the reason behind this is with a proprietary trader, remember, the money that you're trading with, generally speaking, is not your own. So if things go bad, it's not your money that is lost. Then you have more purchasing power and more advanced strategies that are available to you. This is relatively self-explanatory because with more purchasing power, you do have the ability to partake in more advanced strategies. You can allow yourself to perhaps ladder into a position or to average down. There's a lot of different things that you can do with more money that you can't do with less money. So trading as a proprietary trader gives you that leverage, so to speak. And next, you have that it's a good prospect for a full-time career. This just talks about the concept of being a prop trader. Prop trading is among one of the most sought-after career paths, and there's good reason behind it. In the case of funded trader programs, you can trade at your own convenience, which means you can trade on your schedule when you'd like, as long as you are getting those trades in at a profitable rate. Trading as a proprietary trader can be pretty awesome because it can allow you to travel and do whatever it is that you want to do on your own time, as long as you're completing your own obligations. Next, you have the more favorable trading costs, and this really comes down to the firm in which you get funded at. So when trading for yourself, depending on the assets that you're focusing on, you might end up paying substantial fees to your brokerage or service provider. With proprietary trading, however, you can take advantage of lower trading costs due to the scale of where you are trading and who you're kind of taking part in. In addition, institutional traders usually benefit from lower fees as they generate a more considerable volume. This benefit is even more critical for those that are speculating and active day traders, where a large number of trades are going in a relatively short period of time. And finally, we have access to professional tools and platforms. Retail traders often have to pay thousands of dollars to ensure access to professional trading platforms, journals, analytical software, data, and just other competing tools. Proprietary traders, on the other hand, don't generally have to worry about this, and in many cases, the company they trade for will take care of this and more. All the trader has to do is be profitable. Because it is always my goal to be transparent and provide all the information to you, now we'll talk about the disadvantages of prop trading. The first is that it has strict trading rules, generally speaking, at least in relation to a retail trader. The reason behind this is the proprietary trading firm that is funding the trader usually will have rules such as drawdown limitations or contract limits that will need to be adhered to in order to continue having access to your proprietary trading account. The reason behind that is because maximum risk tolerance by the proprietary trading firm is of course something that they are going to try to mitigate. They want the risk to be small, just like you as a trader yourself with your own money would want some type of risk mitigation. Then you have the fact that it can be stressful. The fact that you are trading with someone else's money isn't something that is made out for everybody. Some people feel more stressed if they're trading with someone else's money than their own. You may be one of the opposite. You may feel less stressed trading with someone else's money than your own, but this is in fact something to consider. And then we have that it might limit your investable universe. Many prop trading firms will require you to trade only a particular asset class, or only a specific number or specific list of assets in general, which means that you may have something that you like to trade that you can't trade as a proprietary trader. Generally speaking, most proprietary trading firms will allow you to trade all of the general, most common tradable assets out there, so this is usually a non-issue, but if you do trade some exotic pairs or something far off, you might not be able to find what you want to trade at a proprietary trading firm. Next, it's important to talk about retail trading. Retail trading is something that's described as the activities of a non-professional trader who is just trading independently. These traders are using their own capital through their personal accounts to execute their trades on a daily or monthly basis. Retail traders can buy and sell different types of instruments. Really, they can buy and sell just about anything that their heart desires, because they're only limited by their own income, so to speak. They are only limited as well by their own personally enforced rules and no one else's. So this is something that is very appealing to individuals because they have such a sense of freedom. Which leads into some of the advantages of retail trading are the fact that you are your own boss. This is even more evident in the retail world than the proprietary world because you really have no obligations aside your own personal goals you're looking to achieve. Next, you have a conceptually easier concept when discussing retail trading versus proprietary, and this really just comes down to the fact that there are no rules for the retail trader versus the prop trader, where the prop trader does in fact have certain rules and risk mitigation techniques that they must follow. And then finally, a retail trader is something that is suitable for anybody, and we should say this with a pretty big asterisk next to it, and that's because trading is not always suitable for everyone. But what we really should say is it is possible for anybody to be a retail trader. There's no automatic disqualifying factor based on if you're a male, female, young, or old. It is something that anybody can do, assuming they have the right mindset and skill set for it. There are some notable disadvantages of retail trading versus proprietary trading, beginning with the huge fact that your capital is at risk. In the proprietary trading world, we talked about how you'd be trading someone else's money. But in the retail trading world, it is your money that is on the line. So, in the event of some act of God or just a massive market movement that you're not prepared for, it's your account that's going to experience the blow, not someone else's like you have in a proprietary trading scenario. Then you have the fact that there are limited trading opportunities really falling around the fact that you have lower purchasing power, generally speaking. You generally don't have as much money to trade as you would if you were using a proprietary trading account, meaning your opportunities and what you might be able to access may not be the same. Then you have the potential for higher trading costs. This is a simple concept to understand. All of those advantages that we mentioned that a proprietary trader might experience due to the fact that they're part of a much larger trading organization are not going to be afforded to your everyday Joe Smo that is going to be a retail trader. So this is something to take into consideration because it does move that break-even line a little bit farther away from you as a retail trader. In the game of tug of war, if we are trying to make a living out of trading, we have two options. We can either trade on our own, or we can join a trading firm and operate with their money. While we already know the main pros and cons at this point of both, there are some things that we should mention going forward. The first is to start off with always asking yourself and not listening to someone else, including myself, which is better for you? What do you actually feel is the better choice for you? Don't let any type of pressure one way or the other influence your decision here. It's important that you understand and connect on a personal level with what feels right, because ultimately you'll probably experience the highest degrees of success as you follow your gut. And as you compare both down the line, remember that there are advantages and disadvantages to both, as we covered, so keep those in your mind in an algorithmic standpoint. Try to say which one of these on paper as a math problem seems to make the most sense. So get an idea of how you feel about it, then get an idea how you think about it from an algorithmic standpoint. You might be thinking, well, can I be both a proprietary trader as well as a retail trader? Technically, yes. A lot of times, though, in the scenario where someone is both, they use retail trading more as their quote-unquote side gig. A lot of times, the focus is usually on the larger account, and usually the larger account will be at the proprietary trading firm versus in the retail scenario. Because of this, the retail trading firm gig ends up being a little bit more of a side hustle, so to speak, more than a full-time serious job, which usually leads to more consistent results being achieved in the proprietary universe when traders are engaging in both of these styles of trading at the same time. So can you do it? Yes. Is it something that is going to work? Well, that is ultimately going to be up to you, but now you know the answer. In summary, it doesn't matter which route you go as long as you analyze both of them with all the information present and decide which is right for your personal case scenario. Everybody is different. For me, the idea of proprietary trading always seems to be the better option, at least for most traders. But maybe you are one of the outliers that has an extremely absurdly large amount of money to trade with, and trading with someone else's money is just silly for you because You already have all the money in the world to begin with. Ultimately, you'll have to decide if the appealing aspect of having lower fees, lower financial risk, and generally more leverage capabilities as a proprietary trader are worth it to you to trade with someone else's money at the expense of sharing some of your profits with that money with that proprietary trading firm, versus risking more and usually having access to less and things being more expensive as a retail trader. But until next time, thank you for joining me. As always, folks, best of luck in the markets. I will see you soon.